Hey there, ladies and gentlemen. Welcome to Bulls versus Bears, the weekly trading forecast. My name is Dr. Gregory McLeod of Elite Traders University. It's my great pleasure to be with you to share my insights and forecasts for this upcoming week. This first week of September 2023. Another trading month is gone, and now we're starting September, and I look forward to a very good trading week as we start with non-farm payroll. Non-farm payroll came out better than expected, and we actually saw where good news was bad news and bad news was good news. We saw a little bit of a dip in the markets, but let's go ahead and see what's going on. I'm going to share my screen with you, and we're going to share our screen one, right? How about that, right? And we'll go to how about the reading view? How about that? All right. All right, again, this is brought to you by the Elite Traders University. I'm the chairman and CEO of Elite Traders University. We are a school dedicated to helping students succeed at trading. We have a special strategy and program to help traders become professional in 90 days. We deal with the whole trader. We deal with the mindset, as well as having a winning back-tested strategy that's been winning for over 20 years. And we also deal with risk management and entries and exits and confidence and consistency. Many of our traders have 85 to 90% win rates using our proprietary system. And we're having a special back to school Labor Day special going on right now that I'll tell you about at the end of the broadcast, okay? Or you can click the link and find out more about it. And it's wonderful. It's unbelievable the amount of value that you're going to be able to get to pass any prop trading challenge, if that's what you want to do, or just to learn how to trade professionally. Okay, so let's get to it. Okay, looking for my mouse cursor, it disappeared. All right, weekly Forex forecast, Bulls versus Bears. I want to direct your attention to the risk disclosure on your screen to make sure you understand all risks associated with foreign exchange trading, and this hypothetical performance disclosure. Let you know that there's no guarantee of future returns of any kind. This is purely for educational purposes. So I'll also consult your licensed professional for trading advice. Okay. And I've been doing this for close to 30 years. I've traded everything from trade options, futures, stock, and forex, and crypto. I'm one of the foremost authorities in short-term day trading known as scalping. I spent 8 years as a currency analyst and strategist for one of the largest forex broker dealers in the world. Graduate from UCLA and spent 16 years of instructor in public education. But I've also developed a lot of very profitable systems, which you probably have seen me on social media. Okay. Now we're going to talk about the dollar index. We're going to look at the economic news first, but then we're going to look at the majors. We're going to look at gold. We're going to look at the S&P 500. And we're also going to look at Bitcoin as well, okay? So let's go ahead and take a look and start off with one of my favorite tools I like looking with is my market heat map. My market heat map is what I created. It's the arrangement of currency pairs. It's a trade scanner that scans the markets looking for things that are either uptrending or downtrending. Uptrend is green, downtrend is red, and if it's gray, you stay away, it's moving sideways. And you can get free access to this. We're having 50% off sale as well, but you can get free access to one of the 6 heat maps at mymarketheatmap.com. To scroll on down, and when the markets are open, then these will light up and start moving about, and they will give you a good direction of where the market is going to go. There's also an economic calendar, which you can use as well, absolutely free. Just come over to My Market Heat Map and make use of the tools that are here. And if you would like to, you can log in and actually see the other tools which we have inside of My Market Heat Map, which I can show you really quickly. We have the heat maps. We have an equity index heat map for S&P 500, NASDAQ, the Dow Jones 30. We also have commodities heat map for gold, silver, oil, and wheat and other commodities. We also have a crypto heat map for the crypto majors, so you can track those. Instead of looking at hundreds of charts and timeframes, you can actually see a graphical representation, just like you see on a Bloomberg terminal or maybe on CNBC. This is professional grade types of indicators which show you market volatility for increased trade performance. Okay, we also have an all forex pairs. We have just the forex majors. Those are the currencies are based on the U.S. dollar. We also have an all instrument heat map, which has everything on one big heat map, and then we also have some global stocks as well. Okay, trader tools, we have charts, quotes, economic calendar, financial news stream, market hours, technical screener, national holiday calendars around the world, sentiment, currency correlations, and other tools, plus tutorials and some bonuses as well to help you in your trading. So right now we're going to look at the economic calendar. Usually I start my analysis with the economic calendar because that gives me a view of what the big boys are going to be trading this coming week, okay? So we're going to go right there to the economic calendar, and we're going to go ahead and show more. We had the non-farm payroll that came out, again, 187,000 jobs created. The forecast called for 170,000. So that was a change, but the unemployment rate ticked up from 3.5% to 3.8%, which is what the Fed wants to see more people with job losses in order to fewer people buy stuff, lowers inflation, right? So you don't want to be one of those people. So you want to learn how to trade so you can not be counted in these statistics, right? Okay, so look at Monday, September 4th. We actually have some high impact data this week. Last week we didn't. So the economic calendar didn't start off until like Wednesday, but here we've got a full docket of high impact news. We have the German flag here, and Germany is part of the Eurozone. And so we're talking about, they're talking about a balance of trade supposed to drop from 18.7 billion to 18 billion. That announcement is going to come out at 2 a.m. Many of you are going to be sleeping, but unless you're trading the London session. And then we have a couple of Swiss GDP growth rates year on year and quarter on quarter. And it's supposed to, the growth rate is supposed to drop from 0.6 to 0.5 year on year. That's what YOY stands for, year on year. Quarter on quarter, we're comparing one quarter to the previous quarter, 0.3 drop to 0.1. And that's going to impact the Swiss franc. Might be interesting to look at dollar Swiss or pound Swiss to see how those currencies react with this kind of news release. Also, the euro will be in play as well. Now, that's the only high impact news. We don't have any 8:30 U.S. news to speak of for the first full trading week in September. And it's also a holiday. It's Labor Day. So we're probably not going to see, usually when we have, the U.S. market close, you'll have a very illiquid market, and sometimes you'll have very violent moves in the currencies because the U.S. traders and North American, U.S. traders aren't trading. And so with that large amount of traders not participating in the markets on Monday, what we'll have is sometimes we have either very flat, boring price action, or we have very erratic price action. And we could see big, giant moves that are illiquid, very hard to get into, also subject to manipulation. So you might not want to be participating in this market going into the U.S. session because of the absence of U.S. traders for the well-deserved Labor Day holiday. Okay. Now, Tuesday, September 5th, we have the RBA interest rate decision, and that's a high impact item. And the news, when there's high impact like that, really moves the market. And interest rate decisions are one of the biggest drivers of currency movements. Okay. And so it's widely expected that the RBA, or the Reserve Bank of Australia, that's the Australian Central Bank, they're going to keep rates unchanged at 4.1%. Okay. Now, if they decide to actually hike rates, we could see a move in the Australian dollar higher, right? Keeping rates unchanged, usually what happens is rates are going up and then they move sideways, unchanged, and then they drop. Okay. So that could signal some weakness there, but there's going to be a lot of volatility in Australian dollar. We're not really going to game what's going on unless you have the predictive function indicators found in Pip and Run. Then you could probably, kind of figure out where this is going to go. But if you're just trading a regular system, then you should just stand aside for about 30 minutes to an hour, wait till all the volatility, all that jumping up and down stops, and then it'll choose its direction if you're patient and you wait. Okay, we'll talk more about that. We'll actually look at some charts, and we'll look at the Aussie will be on our watch list along with the Swiss franc. At 3:55 a.m., we're going to have the Eurozone HCOB services PMI final. It's supposed to drop dramatically from 52.3 to 47.3. And you got to understand that as these central banks around the world are raising interest rates, it's really slowing down economic activity. And that slowness in the economic activity is supposed to put a damper on inflation. And when you have a damper on inflation, well, then prices start to drop. But business slows down, it's going to lead to unemployment. It's going to lead to a number of unfavorable things for the average person. At 9:30 p.m., we're going to have Australia GDP chain price index quarter on quarter. They don't give a forecast, so the previous number was 1.8%, but it's going to be all Aussie on September 5th from 9:30 p.m. There's going to be a GDP growth rate year on year, supposed to drop from 2.3 to 1.7% as those higher interest rates are dropping growth, right? Quarter on quarter is supposed to actually rise from 0.2 to 0.3. GDP final consumption quarter on quarter 0.2, no forecast given, and capital expenditures 1.8 and no forecast given. And all you really need to know is that the Australian dollar is going to be in play. And so that's probably where we want to look technically to see, where the big boys are actually positioning themselves. Okay. So we're going to click show more if you don't see any more and say, hey, is that all the news? No, just click show more. And, you can use any economic calendar, but I prefer this one. And we can see now we finally get some US data at 10 a.m. We don't have an 8:30 announcement, but it really doesn't matter because 8:30 seems like there's some type of movement in the euro or dollar, Swiss dollar, yen. There is movement. The bots are still acting like there's news, even though there's no news. But 10 a.m., we have ISM services PMI. PMI stands for Purchasing Managers Index, right? And so we have a drop from 52.7 to 52.5. And so we're looking at, when I see the American flag, I actually like trading the euro because the euro is considered the anti-dollar. So usually what's good for the U.S. economy is usually bad for the euro and vice versa. So, but all we want to do is basically look at the euro and see where the volatility is going to be. Because if you're trading at this time and you're looking at like the Swiss franc, you're probably going to say, wow, it's not moving. But the Swiss franc is my favorite currency pair. Well, the market doesn't care what your favorite pair is. It just knows that there is news and this is going to start moving, and it's going to move the euro, and probably dollar yen, dollar Swiss, dollar CAD are going to be in play. In fact, you have the Bank of Canada interest rate decision coming out as well, and they're widely expected to keep rates unchanged at 5%. And so we know the Canadian dollar will be in play. Two central bank decisions coming up. You have the RBA and the Bank of Canada. And so Canadian dollar has been pretty weak. The dollar has been beating up on the Canadian dollar, red stepchild. And so that should continue and give us a nice opportunity to trade dollar CAD long, or even CAD yen might look interesting too. Aussie trade balance comes out at 9:30 p.m. and that's supposed to actually drop from 11.321 billion to 10 billion. And that's a result of a direct relationship to what's going on with China. China is going through some economic woes. In fact, they sought for comment on whether they can hit 5% growth target. They're like they don't know, right? It's very uncertain. And usually China is a big engine of global growth and big consumer of raw materials from Australia. And if they're not doing so well, then that's impact that. Now we're going to go. In fact, we have Chinese trade balance coming right after that at 11 p.m. on Wednesday, September 6th, and we can see a drop from 80.6 billion of balance of trade to 78 billion. Which doesn't seem like a whole lot, but 2 billion is a lot to shave off, right? Then we have a RBA Governor Lowe. He's speaking at 11:10, and usually when the central bank governor, when he speaks, that the market listens and the currency reacts to what he's talking about, right? And we might see some continuation if this, given how big the Chinese economy is, and given that China is one of the largest trading partners for Australia, and if China doesn't come out with any good news, or if they come out with worse news because they are having their commercial real estate is imploding, they have high unemployment with their youth, and also they're trying to shore up the balance sheets of their commercial real estates and the banks, and trying to lower lending restrictions to try to stimulate growth. So if what the market is waiting for is for China to put some big stimulus package together, some big all-out bazooka of a package to really ignite the markets, right? But this is September, and usually September, is not a very good time in the market. Historically, we've had things like, World War II got started in September, with Germany invading Poland. We also, Korean airline was shot down over Russia in the first September 1st too. So you had a number of really negative things that happen. 9/11 is around the corner too. So September just has that kind of flair about it. And so you might see China actually hold off on letting go a lot of their big ammunition to support the economy until maybe October, which means the Australian dollar, New Zealand dollar, they could keep languishing lower, in fact, right? Okay, so Swiss franc, we have Swiss unemployment rate supposed to remain unchanged at 1.9%. That's going to be at 1:45 a.m. on Thursday, September 7th. We have at 5 a.m., we're going to have Euro GDP growth rate year on year, supposed to drop from 1.1 to 0.6. And GDP growth rate quarter on quarter, supposed to actually rise from 0 to 0.3. Okay. So looking at the previous quarter, and usually the quarter previous early on, the third quarter is usually pretty bullish for the euro. At 8:30, we have our first 8:30 news announcement. We have initial jobless claims, and that's usually a biggie. And it's supposed to rise from 228,000 to 235,000. We have seen in the market that bad news is good news, and the more people are unemployed, it seems like the higher the market wants to go. So if this does come out as more jobless claims, then we could see a risk-on rally. However, if it drops and comes in lower than 228, which is good news for people who have jobs. It's like, if you have jobs, hey, it was great news for them, but not great news for the market, right? So we at 10 a.m. we have Canada news coming out. We have IVPMI, Purchasing Managers Index, supposed to drop from 48.6 to 48. So the Canadian dollar will again be in play. And then you have Bank of Canada Governor Macklem. His speech is coming out at 2:10 p.m. on a Thursday. Friday, we have European CPI, Consumer Price Index. And I just think of inflation, right? And they're trying to, you want to see if, are they winning the battle against inflation? And Europe has had serious hyperinflation in the 70s, where they use a chalkboard and are raising prices as prices are going up. And so they are really vigilant against that. They want to do whatever they can to raise rates or do whatever monetary levers or tools at their disposal in order to fight inflation. But it looks like they're not going to be very successful based on the forecast. An increase from 117.1 to 117.5 could give us a lift in the euro. So that's Friday at 2 a.m. Eastern time. Then we're going to have a whole bunch of Canadian data. We have employment change, supposed to actually increase from minus 6.4 thousand to 18.7 thousand. Unemployment rate supposed to remain steady at 5.5%. Participation rate supposed to actually increase from 65.6 to 65.7. And the inflation rate is supposed to actually rise from negative 0.3 to 0.1. Okay. And let's see if there's any other news there. and we go right. We have 9:30 p.m. on a Friday. We're probably not going to be trading then. I won't. We have inflation rate year on year out of China. This could be very interesting. Not to impact anything we're going to be trading Friday because it's in the evening, but it could impact Sunday, Monday's trading, and we could look at what will happen to the euro. Negative 0.3 interest. The inflation rate is supposed to rise to 0.1%. And then, 9/11, we're going to have a bunch of Australian data coming out. If we want to just take a look at next Monday, we're going to have some Australian and British positioning going on, employment count, unemployment rate. So lots of GDP, UK data coming out next week, okay? UK, you can see this, I took a break. You don't see any UK data for this week. So it's going to take a little bit of a breather, a little bit of respite, and then it'll be back next week, okay? All righty then, let's go ahead and get to our charts. Take a technical picture, get to our 50,000-foot view of the market, starting off the dollar index, the DXY. The dollar is the most traded. It's the reserve currency of the world, of course. And being the reserve currency of the world, it does suit for it to go higher, right? So here we go. So this is our technical picture there. And we can see that we have some higher highs and higher lows that we saw. But this is our sideways consolidation, this little, we've been in this for a really long time. It's just been up and down between 165 and 105.74. We had a wick that broke down below. We've been looking at that wick. We've been bullish against that wick for a while. And we can see the monthly charts is making, we're at a new month, which is, yep. Yeah, so this is our new month. This is our September candle, and that candle is green and very strong, right? And we're bullish again. And we have a morning star pattern, 2 red candles and a green candle, and forming a kind of a U bottom, V bottom. And so that's bullish, right? Because, if you look at the Trader's Almanac and some other cycles, traditionally the dollar usually rallies in September. The dollar is usually strong in September. So this could be, we could look at this, maybe go back up to 105, look at a weekly chart, and you can see that we've been stacking up higher highs and higher lows. Nice big uptrend, right? And we just keep moving on up like George and Wheezy. Very hard to short the dollar. The dollar has been very strong on this weekly chart, but we're running into some previous resistance here that we had back in May, and then about the 104.73 area. But if we break that, then we don't see any more resistance until 105. And so, usually a body in motion stays in motion until it hits an equal or opposite force. And we can see that this force is, we also have a downward trend line that was broken too. Our supply line that was here, and we broke that. It was a triangle, and we broke that. And so we've been going up for the last 4 weeks, right? Go down to a daily chart, and you see we dropped down to the 200 simple moving average. That's the yellow line on my chart. 200 days, there's roughly 200 trading days. So this is above its daily average. So 200 trading days, and it's above its average, and a nice turn on this trend line, turn on 200, and we're heading back to those highs. Okay. So bulls versus bears. This is a great thing when you know where the US dollar is going, then you know where pound dollar, Aussie dollar, euro dollar, the other dollar pair should follow its suit, okay? With some exceptions. But let's look at what I want to look at is the euro versus the US dollar, often nicknames called fiber. So if you need some fiber in your diet, you can see a nice, it's almost like it's like a reflection, inverse of the two. So I mean, if we were to put these two on the same chart, if you put the DXY against it, you can see that it's just an inversion of the two, right? Like a mirror, right? The anti-dollar was what the dollar is doing. This is doing the opposite. This is bottoming out, triple bottom turning up, and this is like a triple top turning down, right? I'll go ahead and remove that. So we can see this is heading downward, monthly chart, long wick candle, bearish Pinocchio bar. You know, my students like when I say when I do that Pinocchio, like, hey guys, let's get bullish. Hey, we should buy it because it's going up. Oh, sorry about that. Never believe a wooden puppet for your trade recommendations. Sorry about that, guys. So that's my Pinocchio. Okay, so there's a weekly, and we can see there's that 200 again, a 3 drives pattern, very bullish. 1 drive, 2 drive, 3 drives to a top, and then boom, we look for prices to come cascading down in the euro. And we also had a reversal full moon too. We have our moon or lunar indicator. People say, Greg, you're a lunatic, right? We had the super moon that we had, and you know, we see the reversals are going on there, right? We have that spike right there, and in fact, I think this is settings. Wait, yeah, okay, yeah. So bulls versus bears. You look at a daily chart, and you can see we're breaking through a key level of support. The euro looks like it wants to drop. Euro going to zero? No, not zero, but our next level of support comes in down here in the 106.68 area, and that is a goodly drop there. So bulls versus bears, I am bearish the euro. Okay, let's go to cable, or pound versus US dollar, nickname cable, named after the Atlantic cable that spanned the Atlantic Ocean, connecting North America with Great Britain. And we can see that from the monthly chart, you can see we're also doing a similar thing, a little turnabout, long wick candle, not so long, but our King Charles rally that we've been following, maybe a little petered out there. He's crowned, and now it's coming back down, right? So we can see reversal candlestick that we're way below the 200 moving average, which is just telling us that we're bearish. We're in this very, very big downtrend, right? And the downtrend is kind of accelerated, where we couldn't even make it to the old trend line. And so now we have this other trend line that we're fighting against, and we probably look down for price to continue to drop to these different steps or previous lows that we saw, like back in May 22nd, and we had some support down here that we had back in March, and we also, while we were marching up, we also had this October 31st low here. So we may come back and visit all those areas over time. Bulls versus bears, we are bearish. And we also have structure change with lower highs and lower lows. We have a head and shoulders pattern. Lots of things are like telling us that. So we might see some type of a rally, some type of little short-term rally, or not. With no U.S. traders there, this thing might just shoot very quickly with no liquidity and no other orders. When you have other orders and you have high volume, you're going to have people buying and selling at different levels. If those people are on vacation, maybe eating a hot dog, or we're watching watching something on TV or going to the movies or something, they're not going to be here to take the other side of this trade. It can blow right through this area very quickly. Okay, so that's pound versus US dollar. We'll go ahead and look at we look at Aussie dollar, and that's going to be very, very, very key to look at because of the China news coming out. And we're going to actually start with our monthly chart there. It's been hanging around this 64.50 to 65 area, and finally we got some capitulation, kind of a rejection here And we had this lower swing highs and lower swing lows, and it's very, very tough to fight that. If you go, actually, you can see the fight on the weekly chart, and then we have this. We rallied up to the 65 and some change. So we rallied up there, and then we got some rejection. Looks like people might construe this as a bullish morning star pattern. I would be very careful of that. I think this thing is going to collapse. I got shaken out on this, because you've got this move here that rallied up again. It was counter trend move, and you guys know I'm more trending now, right? And not so much the counter trend. That was a nice counter trend move. And in fact, some of my students were like, great, you didn't take that? It's like, yeah, I did. I did take some of that, right? I did take a little bit of that, right? Is that fair? Yeah. No, that's not it. No, that's not it either. Anyway. Oh, okay. Back there. Okay. So bulls versus bears. Look at this. Tweezer top, bearish. We have indecision candles, and then we have a big decision candle breaking the lows of these indecision candles. So bulls versus bears. I am a bear on the looking for something here. Looking for arrows. Yeah, arrows. Yeah, we can maybe come back down and test the support area again. I'll come back and test the 63, 67 area, and there'll be a goodly amount of pips. Would like to see some type of a rally from that area. Maybe go to a 4-hour chart, and you can see we might get some type of a rally. We got the nice double top there, but you try shorting there, and it goes up, and then so I'm looking for a short-term rally from this area, and then from that short-term rally, I'm looking for a drop after they suck all the buyers in, and again, you get in and get out. Don't overstay your welcome. Think, oh man, it's gonna go back up to 65. You're gonna get smoked, right? In fact, you take a fib. If I were you, I'd take a fib on that baby. I'm like going, maybe go 64.56 on a rally. Maybe we go, maybe we go as high as 64.70, maybe, right? And then once it rallies there, they get people in. Once they load it up. Is this like that drop ride in like Six Flags Magic Mountain or something, right? Tower of Terror, or like in Disneyland, and you get in there, right? That's the tower. That's a technical term there, right? Tower of Terror. Anyway, moving right along, let's go ahead and look at the USD CAD. We got lots of Canadian data coming out. We want to take a look at that, and we can start with the monthly chart. And we can see we have a nice flag pattern that I've been watching for a while. I've been telling you guys about it. That this flag, like a little cobra coming up out of a basket, got little heads, it's getting ready to take off and come back and take out these highs. And the dollar continues to barrel along very strongly. And as growth is coming down, China's not demanding as much oil. The demand for oil may not be as much. And Canada is one of the largest suppliers of oil. And so you don't have that oil push for the Canadian dollar. We're above the 200 simple moving average. We have an uptrend of higher highs and higher lows. And I would look for ways of getting long. That's what I would do. Again, this is not a solicitation to purchase anything. Just my 2 pips, right? Look at a weekly chart. You can see some higher highs, higher lows. This thing has run up kind of big. Got a little indecision candle. Might get a little bit of a pullback. This is how it does. The second in, oh yeah, I'm gonna get long, and then it turns around, right? It takes your lunch. That's what the market is. It's a manic depressive bully that wants to take your lunch, and right. So then it's not your friend, and it will hurt you. It's like fire, Yeah, you can You can start a fire. You can cook with it, keep you warm. You let that stuff get out of control, it will burn your stuff down. Okay. So you treat the Forex, treat all markets like fire, right? And you just don't go throwing it around, right? You're very careful, you're protective of it because, you may think these are just little bars, but these things can suck your account dry if you're not careful, okay? So here's a daily chart, and like you can see reversal right there. The reversal may be a little. I would look for I would look for a reversal. Maybe even it'd be nice to have a little bit more pullback, maybe down to the 38% retracement. Would be nice. 34, 36. I would like to buy a discount. Yeah, it's gonna go up, but you buy it here and it drops. You get FOMO and you get hurt. And this will be the kinds of coaching tips and things. I'm just dropping some coaching tips and things that I drop to my mentorship students. In fact, we're having a great back to school Labor Day sale on mentorship. That not mentorship is a boot camp. It's a 6-week where it's going to actually extend it for the first 5 people. We're going to give you 8 weeks access where I'll be working with you on a weekly basis and show you my power trade system, our system where people have gotten some funded accounts and might be very you might something you might want to look at. Okay. But I'll give you a link to that and also a coupon code to take the price down from normally it's $5,000 and we'll take it down to $997. And we're going to stack value for you too. Make it totally irresistible. Make it like a stupid no-brainer offer that you can, you don't want to miss that. All right. Anyway, dollar CAD. Let's go ahead and let's take a look at another. So bulls versus bears. I am bullish dollar CAD. Very short term. I'm looking for a pullback. I want to buy a discount. I wouldn't want to buy it up high like that. But now this is. And oh wow, this is lots going on there. I'm going to remove all drawings, right? And here is we're going to start the monthly chart, and this hasn't been a rocket ride. Hasn't been a smooth ride though. It jerked your chain. Like when the thing dropped like that, I'm like, oh, where's this thing going, right? And then it shoots right back up. We're looking at maybe 155 target, right? This thing could go ballistic, right? Because basically we've got some old highs back here that haven't been touched in years. Since the 80s, right? 160.25 back in 1990, and then we have we had we're at the highs of 1998. We haven't seen highs like this since 1998. Since my daughter was like 2 right back then, right? And I won't tell you. And I was a young man, younger, and you know what? A big shout out and prayers and for to Jimmy Buffett. I remember my friend dragged me to a Jimmy Buffett. I had free tickets. I told him, look, I got free tickets to the Jimmy Buffett concert, but guess what? You find yourself a date and you're gonna go because I wasn't into Jimmy Buffett back then, right? And he called. I give him the tickets, right? I give him tickets to Jimmy Buffett. And he goes, hey, can you go with me? I'm like, no, I don't want to go with you. Go find a girl to go with, okay? I don't want to go. And he goes, oh, nobody wants to go with me. It's like, ugh. And I went. It was a great concert. I'm glad I went. I'm glad I got to see him at the Universal Amphitheater. Now when I travel, I go to islands and things, and he's got the margarita land everywhere, margarita hotels, margarita land, casinos, margarita land resorts. And so it's not just a song, in fact, I'd say he really didn't sell a whole lot of albums, but his live concerts and the parrot heads are just, those are fans are just, amazing fan base, the parrot heads and Jimmy Buffett. So again, my heart goes out to them. I really, as I got older, I really did enjoy Jimmy Buffett. I want to thank Matt for dragging me to that concert. So $1 yen. I digress. And I do that periodically. 46. Look at this gap of space here. Once this thing breaks this high right here, This thing is off to the races here, right? And this is a monthly chart. Looks at the weekly. Look, it's like kind of like forming a little evening star there. And I said, look, give me a pullback. Give me a discount. Give me a pullback. Let me get this thing cheaper. I don't want to pay 147.66 on it. If I can get this, and this is what fibs are for. Fibs are for discounts. People ask, I don't understand Fibonacci. It's like, I just want a discount. Do I get a 23% discount, a 38% discount, a 50% discount, or a 60% discount? Give me a 60% discount. I'd buy this at 60% discount. At 41.90, I'm all over it, right? But right now it's overpriced, right? No, I want to pay full price for it. It's like, if you've got FOMO and you feel I'm never, you go up and leave me, and then I won't. If you whine and cry in your oatmeal, of course not. But guess what? It drops and you get long, and then guess what? Now you're like, oh my God, I'm gonna say we're gonna go up, but this thing just gets back to break even. I'm just gonna get out of it. Then you get out of it, and then it shoots up to 150. Oh, I should have. You smack yourself or shoulda, woulda, coulda. No shoulda, woulda, couldas. That's one of the rules of being in the Elite Traders University. No regrets, because why there's no regrets? Because there's always another train leaving the station. Okay, there's always another tube leaving the tunnel. Right, so there's no need to cry because there's tons and tons of opportunity. And when you drop down to like a daily chart, drop down to a 4-hour chart, you just see these opportunities over and over. It looks bullish engulfing above the 200 trend line break all the time, right? Anyway, bulls versus bears, dollar yen. I am bullish, though I want to get it at a discount. Okay, I want to buy it cheaper. Okay. All right, so we've covered the. I want to get dollar Swiss. We don't usually look at dollar Swiss because we have some Swiss data. And I remember my friend Walker, he would do the analysis on, I'd get the euro with like 27 different countries I got to talk about. And then the brokerage, he would get the Swiss franc. I'm like going, my God. And he would joke, well, we're going to talk about clock production and chocolate. And we're going to talk about, precision tools. And it's like, and I get the euro. Right, because I had to work hard. I had to analyze all the major current countries in the eurozone. I'm not whining. It made me I'm able to talk to you guys, right? About it. Whatever doesn't kill you makes you stronger, right? And my stomach would be in knots because I have to stand up and talk to people about what's going on in the euro, what are the big major points we should look at. So now, how ironic, look at the Swiss franc, right? And it's not clocks and chocolate, right? We've actually got some employment data, and we also have a nice little Harami reversal candlestick pattern on the monthly, which is kind of huge, right? Then we look at the weekly. We also have some movement as well. We're still below the 200. So I'm looking for a pullback again. Maybe some, and then we also have this downtrend. You take we might come back and this is a downtrend. We're rallying and we're below the 200. So this may continue to drop. Actually, the dollar is very strong as well. If we don't have a clean pattern or like here, the daily looks interesting, right? Price rally, came back, tested the trend line with a morning star pattern. We could, move up toward that 200th of moving average. 4-hour chart, maybe a little skanky there with a double top. Bulls versus bears. I would probably scratch this off my list. Okay. Now, just a thought that maybe pound Swiss might be interesting. With the pound in the downtrend pound weak versus the US dollar and dollar Swiss, with the Swiss franc kind of holding its own, we could see maybe a drop in the in pound Swiss, right? Again, but looking at all these long wicks, this is probably nothing for us to trade. So scratch that idea, guys. Swiss franc, I try to give it a break and give us some extra, some other things to look at. But let's go right to gold, right? XAU USD. This is our favorite. I traded for group, our winner circle group, and we trade gold. We look at gold a lot, and then we look at the Nasdaq too. But gold has been really volatile, nice big swings, and right now we're at 1940. After hitting some support, and we're like back in this range though. So we're not really we could take buys and sells in either direction when we're stuck in a range, or we do have a slightly upward bias above the 200 simple moving average, a long wick candle that is reversal right there. Go to a weekly chart and we can see that we're still above the 200. Price forming a double bottom right there, which is, we get that a little bit, and there's like shades of gray double bottom where it did, it made a little bit, just hit some of these stops and came back up, and so we have a bullish flag pattern, right? So I kind of draw it. I don't like drawing through wicks, and I'm gonna do a session on drawing trend lines, right? So we had a nice little flag. We're kind of breaking out of that flag, and I think we, based on that, we could probably see a move back, maybe not that high, but at least maybe back to 1977. It's very interesting how gold has been able to rise against the U.S. dollar. Very, very interesting. And it may be, we had this bearish head and shoulder pattern right here on this weekly chart, but we're still, but if it breaks 1989, then that's it. This baby goes back to 2066. We just have we're in an uptrend where we've got some, little, and we're coming against a downtrend line. So with their big bullish green candle, so we could ram through that. Let's go through a daily chart, and you can see we broke through, but with it took some troops out to get through that barrier, right? So it doesn't have very much momentum left. So we'll see if that continues, or if we break back down, or it forms another little small shoulder, more like a Quasimodo than a head and shoulders, right? Bulls versus bears. I'm cautiously bullish, but we barely got across this trend line, and it may just come back down, right? And we're topping out 3 candles, like a Toby Crable kind of NR3, NR4 sideways moving a breakout, maybe, right? Let's take a look at oil. We can go WTI. Yeah, we can look at it. I'm gonna look at a CFD. Why? It's just easier than all the contract specifications. There we go. 85.50, higher highs, higher lows. We have uptrend. Go to a weekly chart. We have this huge bottoming pattern here. We're just taking off, breaking out of this range. Nice little range break. Little range break right now. Right there on the edge of the range break. So not quite a range break, but low liquidity holiday trading could push this right through this, but slice it through like a knife through butter. And then we look at some upper levels right here at the 93 area. Right. Interesting. Oil is up. And with the hurricanes and things going on too, and the inclement weather, that could disrupt supplies. And this could be more of a supply driven rally versus a demand driven, right? Because we're just coming out of the summer driving season. They'll start gearing up for heating oil coming in the winter. And that'll be interesting to see if El Nino and the El Nina creates a warmer winter, less demand for heating oil, less demand for the distillates and all that stuff, right? All right, let's go right to, I'm actually going to say Bitcoin for last because I like talking about Bitcoin. But let's go to NASDAQ 100. I'm loving that, loving the swings on that, and the NASDAQ 100. Looking at a monthly chart, and we can see that we got that old high sitting there, yummy, 16,813.22 or so in that neighborhood. I didn't get there exactly. We broke the trend line where people were like saying, oh, wow, we're going to go into recession. Everything's going to go to hell in a handbasket. We've just been going up, walking up the wall of worry, right? It's one of the sayings they say on Wall Street, buy when there's blood in the street, right? Lots of blood. Everyone's hollering about a recession. This thing is clocking new highs. Chairman Powell is raising interest rates, and the NASDAQ never usually, last time we had interest rate hikes, like in 2000, that crashed the NASDAQ, right? Way back in 2000, we had Greenspan started hiking rates and the wealth effect and all that, and that caused the market to go down. This time, it's like, you gonna raise rates? Is that all you got? Hike me some more. We're going higher. Hike me some more. Is that all you got? Oh, that's it. And then they keep raising rates, and the thing keeps going higher, right? Usually, tech companies, they burn through a lot of cash, a lot of loans, right? But a lot of these companies are mature now in a different cycle where their cash burn is not as great, right? So looking here, we can see that we are coming to some support. We had a long wick candle. It looks like a hanging man. It could turn into a bearish move, but the trend is up, guys, and we're hitting support. Let's look at a weekly chart. And you can see we dipped weekly chart above the 200. It looks long to me. It looks like we can go higher. Maybe get back to the 16,000 area. We'll go to the daily chart, and you can see maybe we pull back a little bit, but still above the 200. That's a report card. As long as it's above the 200, it's pretty strong, right? So bulls versus bears, NASDAQ 100. I am bullish on that. And let's look at the SPX 500. That is the S&P 500 CFD. And you can see that I was bullish a long time ago. We held that trend line, and we never broke through it. We tried, and this kept going up. We broke out of the triangle, this big triangle that we had back here, and there was an inverted head and shoulder pattern, and it's just been clocking. So there we go. There's our inverted head and shoulders, and usually the height of the head to the neckline is how far we go, and that's probably how far we went. Actually, we stopped at 46.32, around that neighborhood. And we still have an uptrend, guys. And a lot of people say, "Well, look, there's a big red candle there." It's like, yeah, but there's more green than red. There's more green than red, and that sell, that's all that the bears could do. Buyers stepped in and snapped up that stuff like it was hotcakes and sausage, and boom, right? And now we got another candle too. And these guys are probably going to try to sell it again. This was like a long wick Pinocchio bar. Hey, guys, let's get shorter, right? NASDAQ's going to go down hell in a handbasket. Oops, sorry about that. Never believe a wooden puppet for financial advice. Consult your licensed professional, but not a wooden puppet like Pinocchio bar, right? Okay, that doesn't get old with me. I'm sorry. It may bother some of you, but I am my best audience. I'm rolling on the floor laughing right now. Weekly chart, you can see nice bounce there, doing the same thing, kind of breaking through, suckering in the bears, and then buyers stepping in. Nice little morning star pattern, and it looks like it's going to go to the moon, or at least to up to 46.32. Might even just retest this old high. Again, this is against seasonal patterns and things. It's like selling May and go away. If you sold May and go away, you kind of missed all of this, right? But we also in a hiking cycle where the Fed hasn't hiked rates in like 10 years, and now we're hiking rates. So this is like one of those, if you look at the 71 years that periodically we have a rate hiking cycle. We haven't had one since like 2004, 2005. So this is our first one, and so it's kind of screwing up our seasonalities, right? Daily chart, and we can see a nice little bottom there against the trend line, and now we're above the trend line. So last but not least, let's look at Bitcoin, BTC, USD. I'm not going to look at any of the altcoins or anything like that. I'm sure there's other guys who are covering that, doing a far better job than I would be cared to be interested in. I'm holding on to a portfolio, a plethora of altcoins with great projects that I strongly believed in, which are under a penny right now. So I am not your crypto person. I will trade Bitcoin though, and we look at our monthly charts, and it's pretty easy. It's kind of like it gets to 30,000, and then it comes back down to about 15, and then it goes back up to 30 again. So it just kind of like bounces around. It just reminds me of like Pong, or Breakout. Just boom, 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 boom. Like it's at the bottom. It's the bottom of the channel. Well, actually, the bottom here, it's the bottom of this thing is like 15 or so, right? And then we bounced up, and now we're bouncing around in here, right? Between 25 and 31, right? Got a Harami candle, right? And now once the Fed stops raising rates, guys, this is going to go ballistic, right? We'll probably recap. We'll probably knock out all these old candles right there. Really have a shape, right? So all this that's going to be projected out over here, right? So these three candles, these are basically like gaps, and this will probably fill that, but probably not until the Fed, actually says they're finished hiking rates, right? That's the only thing holding this down. And they were talking about actually cutting rates in March, right? So we can see our big crypto rally in March. So I wouldn't get rid of any of my crypto. And we have indecision double dojis. Usually, we get some type of major breakout, maybe a break south, right? 3 drive pattern, 1, 2, 3. Right? We got knock 3 times on the ceiling if you want. Me, Tony Orlando and Don, 1974. Boom, twice on the pipe. Bink, bink, as the answer is no. All right, so this thing could drop, right? So how do you know about that? I had grandparents. No, not true. Not true. Daily chart. There we go. See, I mean, this stuff daily. Doji, breakout. Ooh, bearish reversal at 200. Doji. Right? It's like someone on life support. Beep, 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 beep. Right? Bulls versus Bears. We're below the 200. We're making lower highs and lower lows. However, really a flat consolidation like that, it could go either way. We had a flag basically broke out, and usually when prices break, they continue to break in that direction. So bulls versus bears, I'm bearish Bitcoin. Yeah, the top of the range is like 3,100. The bottom of the range is about 15,000. So I'm actually looking for this to maybe trend down, and but come March, we'll probably see something very interesting happening, right? And let me go ahead and tell you about I'm really excited about our Labor Day sale that's going on right now, and I look forward to you to getting involved and joining me in, a lot of people say, well, your courses are too expensive, Greg. It's like, well, they're good, and good stuff usually costs a little bit, right? But I've done something for you guys. I know that you guys are trying to trade the prop trading challenges. So what I'm going to do is we're going to start class on September 13th on that Tuesday, right? No, 12th. Okay, 12th, and we're going to that's when we're going to start class. But this is our Forex Foundations Power Trader Boot Camp, your fast track to financial freedom, and enroll before midnight, September 11th, to unlock $71,444 worth of value for just $997. Okay. And so, we are going to, one of my students was interviewed by Hugh. Cobus passed his funded trader challenge, and now he has a $200,000 live account to trade. And you're going to learn the exact method and how he did it. And I'm going to be teaching you that for $997. I know, pinch me, right? So you're going to get, you're going to have a fast action bonus. First 5 people are going to get a 25,000 Blue Guardian audition account. You're going to get a pre-trade checklist, Trend Spotter. The pre-trade checklist is $297 value. Trend Spotter currency indicator. And you guys love the Trend Spotter. Well, it's $1,197 value. You'll get that. You'll get weekly group coaching calls with me. Usually I charge $5,000 an hour to talk to people. And guess what? You're going to have an hour with me for 6 weeks. And I'm going to be working with you and helping you with the strategy. We're going to go use my market heat map. You're going to have the power trade templates. You're going to have the A1 video library. You're going to have lifetime access to the class video archive, lifetime access to the trade simulator, trade tracking journal. We're going to have a lot of bonuses that are included with that. Plus, you're going to cover the key factor that 95% of traders miss and learn how to outperform them with ease, achieving consistent profits in 30 minutes or less. And then 10 lucrative profit centers in the Forex market that generate windfall gains in just 12 months and show you no signs of slowing down. And then we're going to give you that access to that ultra powerful tool that does 99% of the work for you. And it precisely reveals where the profit opportunities hang out, right? Just claim your spot there. Got 7 days for this offer. It's again, a big value, $997. You can use a coupon code NGHX8FX1. And then just go ahead and fill that in. We'll take it down to $997. Due to the nature of this, there's a no refund policy. But I tell you what, I'm behind you 100% to help you, to walk you through your next challenge so you can have your own 6-figure account to trade and live the life of your dreams. And that's my promise to you, that I'll give you 100% of my attention to help you become successful. Yeah, my name is Dr. Greg McLeod. Again, you go to elitetraderslive.com/labor-day, claim your spot. There's only 5 spots available for the funded trader audition that's going to come with that. And everyone else, you're going to still have access to all those bonuses. Okay. All right. So I'll talk to you soon. Thanks so much for watching Bulls versus Bears, the weekly Forex forecast. And I look forward to coaching you, seeing you on the other side. All right. You guys take care. God bless you guys. Be safe. And we'll talk to you soon. Thanks. Cheers. Bye-bye.
If you felt a spark here and want to see how these principles can be used in your own trading, go to www.elitetradersuniversity.com/apply to book a free session with our team. We have helped hundreds of people remove the frustration and obstacles in trading to become consistent, highly profitable traders. These are proven principles that just work. Happy pipping!